Brent, what did you make of their earnings?
It was mediocre. You look at the AWS number was really in line. Their margin fell out of the sky from 40% to 32% in the AWS business. They've been saying for a while that AWS margins are too high, but I go back to
I didn't know that.
They needed bigger numbers to effectively have a bigger upside in the stock, and they just didn't deliver. So from our perspective, I would just say, like, overall the numbers looked okay. It wasn't amazing. Microsoft's gaining share, there's no question. There should have been a bigger inflection. You saw an inflection at Google, you saw an inflection at Microsoft, you saw an inflection at Meta. There's no real inflection. So the ad business in Amazon did a little bit better. Retail margins a little bit better. AWS in line, but the margin again fell out. And so when we've said the number one thing investors look at is AWS, it's the lead horse as it relates to the valuation in this company. And that was, as they say in The Voice, for whatever singing show you want to say, it was a little pitchy, not as good as we've seen from other performances.
I am curious about, I mean, we're talking with Caroline Hyde earlier about the kind of diversified nature of Amazon's business, at least relative to some of the other players in the tech space, particularly, like an NVIDIA or even like a Meta. Does that diversification actually work against them?
It does, because here's why. So institutional investors, when we talk to our clients, they are looking at Amazon either from a consumer lens or a tech lens. And most of the tech investors are like, well, I should just probably own Meta and Microsoft based on their performance versus owning AWS, from what I just told you. And then if you look at the consumer side, right, this isn't an amazing business, right? I mean, it's a big revenue business, but the margins are single digits. They're low single digits. And when you think about tariffs, they are impacted at a higher rate than perhaps Walmart and others. So I think most of our investors are like, look, I'd rather be in Walmart, I'd rather be in Microsoft, I'd rather be in Meta. And so you have this divergence. To your point, I think the diversification right now is hurting them. And this is more of a portfolio management perspective of, hey, they just feel like they have better consumer sleeves, and then you have better tech names you can own at this point. So again, I'm a fan of Amazon. I think Jassvy's done the right thing. I think he's a software guy. We are 30 years in the software business. He understands high margin businesses. He doesn't like low margin businesses. The unfortunate nature is you had a massive contraction in AWS's margin, and everyone's been asking for this margin contraction for them to invest in AI. So they are behind in AI in our perspective. They haven't lost the race. But I think this is, perhaps maybe good signs they're investing more here in AI.
Are you comfortable with the capex spend? Is it at the right amount? Do you want it to go up? Do you want it to go down? What?
I think we're comfortable. You saw just in the last week, we've raised capex by $50 billion across Google, Meta, and Microsoft. And then Amazon's capex numbers were higher than forecasted in terms of the numbers. So the numbers this quarter for capex, again, we're a lot higher. We were at 25.7 billion, and they came in at 31.4. So again, I think it's a common theme across all the hyperscalers. CapEx is going higher. Constraints are there. Meta, Microsoft on the callbacks last night said they're capacity constrained, more demand than supply of AI. So they have to keep investing. So this makes sense. I don't have any issue with the CapEx number. I think the issue is the AWS business not accelerating and a bad margin. And that, again, that's your lead valuation for Amazon, and that's what's dragging the stock down 4%.
There's been a lot of talk. I mean, it's been, I don't know, what has it been, like 4 years now since Jassy's been at the helm. And there has been some talk about whether there needs to be some sort of strategic M&A, meaning not just buying companies, maybe even potentially divesting or spinning off something in order to make the company, and more than for that matter, the stock more nimble. Is that something you would be supportive of, Brent?
I mean, I think what he's done is pretty amazing. You see, he's improved margins. He's held double-digit growth. I think he's gotten away from, the risky bets to the more certain bets. He's, again, the individual that led and built AWS, have huge admiration for what he's done. And I think, again, he hasn't said this to me, and I have not met with him. But I can tell you that most software people I know like the software business for a reason. High recurring, high growth, and big margins. Amazon does not have that in any other business other than their ad business. And so, I like him at the helm. I don't think they have to do anything dramatically different. I don't think they have to go out and buy an AI company. I don't think they have to divest anything. I think they have a lot of the assets. And it goes back to they have to innovate faster at the core. If you ask industry experts, they believe Amazon can do more in AI. And they believe that Microsoft and others are doing more, Meta doing a lot more and leaning in harder and showing the returns, the tangible returns, showing that advertising went up 9% because of AI on Meta's call last night. So I think Amazon needs to showcase more of that. And I think they have a lot of the organic components to do it. But yeah, if they got a hall pass right now, I think every investor would say, go acquire the AI talent you need. We're seeing $100 million checks for individuals to run AI businesses at other hyperscalers. These are crazy numbers.
Yeah.
But it's what it's taking. And so they, I think that's an area that investors would say like it's the right thing to do.
Yeah.
If Zuckerberg's doing it at Meta and Nadella is doing it at Microsoft, Amazon needs to step up too.